In this video, I am going to do the technical analysis of S&P 500 index for the week commencing from January 3rd, 2022. First of all, I would like to welcome you all in the new year 2022, and also this year is the year of bubble. Okay. So this is the year of bubble, year 2022. Now, why I am saying that this year 2022 it is the year of bubble, because S&P 500 has gained more than 41%, in just 2 years, from January 2020 to December 2021. In just 2 years, S&P 500 has gained 41%. Okay, so this 41%, it was not seen previously, okay, in last at least 2 or 3 decades, which clearly means that S&P 500 is overvalued, it is overpriced. Okay, so a gain of maybe like 20%, 20 to 25%, okay, it is acceptable. But this 41% in just 2 years, okay, and if you see that it was just moving up and all up and up, that's it. Okay, in last 1 year, from November 3rd 2020, okay, the presidential election, so from November 3rd 2020 to December 31st 2021, market was just moving up. It was moving up. If you analyze the weekly and the monthly charts, then you will realize that yes, market is simply moving up without any major correction. Okay, so this is the year of bubble, year 2022, and because market means S&P 500 has moved up like 41%, so expect like 15%, approximately 15%. Okay, 15% correction in the market, maybe more. Okay, because if there will be a correction of 20%, then bear will further bring it down to like 25-30%. So that is not expected to happen. So this is from the safe side, 15%. Okay, 15% correction in the S&P 500, minimum 50% correction in this year, probably in the first quarter or in the second quarter. Okay, not after second quarter, but first or second quarter it will happen, and it will certainly happen. Okay, this video is all about the technical analysis of S&P 500 index. So I will do this technical analysis in two parts. First, I will do it on the weekly chart, and then I will do it on the daily chart. So this way we will be able to get the most accurate results as we are getting for last many months. If you see this, the previous technical analysis. So last week I told you that if on Monday was December 27. Okay, so I told you that if on Monday, if market moves up and if it crosses, or if there will be a gap up, or if it crosses 4744, then for sure it will shoot up. It will shoot up like a bullet. Okay, and it will shoot up towards 4790 and 4800, and that will happen, and then nobody will be able to stop the market. So within a day, market will shoot up to 4790 or 4800. Okay, and if you see here, this is what happened. Okay, let me show you here. Let me just, if you see this very heavy candle, this is the candle that I was talking about. Okay, and the highest of this candle was 4791, and this is what I told you in my previous technical analysis, that it will shoot up and it will hit 4790 or 4800, but 4790 is the resistance. Okay, and once it hits 4790, then it is going to hold around 4790 or 4800 for a while. Okay, before either either coming down or moving up, but it will hold at 4790 or 4800. And this is what you can see here, that market, it did. Okay, this was the hold of the market here on the resistance level. So as I'm telling you for last many months, that my support and resistances are extremely sensitive, because I have analyzed last 100 years of data, and then I've calculated the support and resistance, and that is okay, and this is the reason why means whenever market comes and hits by support or resistances, okay, it takes a break. Okay, this is what happens. Anyways, so let's do the technical analysis. So first we will do the technical analysis on the weekly chart. Okay guys, so we are here on the weekly chart. This is the weekly chart. Okay, so on this the weekly chart, if you see, this is the last candle. So if you see the previous candle for the week of December 20th, it was a very heavy bull candle. Okay, so I told you that in the coming week, particularly on Monday, the market will first shoot up. Okay, so and if it crosses 4744, in that case it will further shoot up like a bullet. Okay, and it will then hit 4790 and 4800. And if not, then first it will shoot up and then it will come down. So this particularly, you know, upward movement, it was this particular this upward movement on Monday, on December 27th, that movement was provided by the previous very heavy bull candle, where it engulfed the previous the bear candle. So there was this, you know, engulfing of the previous candle, and this has helped the market to build this candle. Okay, now if you look into this candle, so it's again a bull candle, and the low of the candle is the open. Okay, which means that there were very heavy bull sentiments in the market. Then it moved up, it hit the upper boundary of the Ichimoku, it crossed the upper boundary of the Ichimoku, and then it came down. Okay, so it clearly respected our this resistance. Okay, and it held it at this resistance, and then it came down, but still it's a bull candle. This bull candle, okay, and this bull candle, these two bull candles, okay, which means that the sentiments in the market are still bullish, okay, which means that on Monday, on January 3rd, chances are, I'm not saying that it will happen, because this is a half bull candle. Okay, but the chances are that first market may come down. Okay, and then it may hit this 4740, This is what I'm telling you in you know, previous videos, that this 4740, okay, it is very important support and resistance. If market is below 4740, then it will act as a strong resistance. If market is above 4740, then it will act as a strong support. Okay, so first it will come down. Okay, and chances are that it will hit 4740, then it will try to hold at 4740, and then will take a rebound, and then will further move up. Okay, but this picture will be more clear on the daily chart, because now we are doing this technical analysis on the weekly chart. So this is likely to happen, but what is most likely to happen, it will be clear on the daily chart. So let us first complete the weekly analysis, then we will move on to the daily technical analysis. Now comes the technical analysis. Okay, so let's do the technical analysis first. Okay, we have the Bollinger Band. This is the upper band of the Bollinger Band, and somewhere around here is the median of the Bollinger Band. Market is between upper band and the median, which means market is bullish. Now we have the moving averages. If you look into the moving averages, there is a clear fan out. Market is bullish. This is what I'm telling you for last many weeks, many months, that because there is a clear fan out, okay, the market is bullish. Okay, now comes what? Now comes the Ichimoku. Market is trading above Ichimoku, which means market is bullish. So through Bollinger Band, through moving averages, and through Ichimoku, market is bullish. Now comes some other technical indicators. Okay, if you see these technical indicators, first we have the MACD. Okay, now finally MACD, after many weeks, many weeks, okay, finally MACD is bullish, partially bullish. So if you see, like, the MACD is 120.52, and the signal is 120.29 on the weekly chart. Okay, so this has happened after this. So last time this was the candle where okay, when the MACD was positive, means when the MACD was bullish, sorry, when MACD was supporting the bullish movement. So almost after 1 month, MACD is now bullish on the weekly chart again. Okay, but see, it is still marginal. For example, if the market comes down in the coming week, in that case, MACD will be flat again, and then in that case it will favor the bears. Okay, so MACD, yeah. Now comes the stock RSI. Stock RSI, if you see, the K channel is 42 and the D channel is 38, 39. Okay, so K is more than D, which means it is still means it is supporting the bull movement. So the stock RSI is supporting the bull movement. See, it is still weak. It is weak, but it is still supporting the bull movement. Now comes the divergence. Okay, finally we are seeing some movement in the divergence. Now divergence is going to move up. Sorry, the divergence is going to increase. And see, whenever divergence is around 70 or 71 or 72, that means the divergence is hitting the historical levels, and whenever it hits the historical levels, market comes down sharply. Okay, and this has happened before, okay, many times, and this will happen again whenever market hits the divergence like 70 or 71. So see, if in the coming week, if market holds here or if market moves up, okay, on the weekly chart, then the divergence will further increase to like 68 or maybe 69, maybe 70. Okay, and then in the second week of January, second week of January, okay, when the divergence will hit the criticals, okay, then you can expect the market to come down heavily. Now comes the momentum. Okay, momentum is not there because see, previously, like for approximately 2 months, okay, market was range bound. Okay, which is why the momentum is already momentum is almost dead, means momentum is not supporting neither bulls nor the bears. So considering all of the aspects here, yes, we can say that market is bullish. Okay, but again, you need to consider this fact that the MACD and the stock RSI are marginally bullish. They are not heavily bullish, okay, or they are not regular bullish, but they are just marginally bullish. Okay, so yes, the market is see, the market is bullish, but you can say that it is weak bullish, means it is bullish, no doubt it is bullish, okay, but it is weak bullish. Okay, now the movement of the market, okay, how it is going to behave, how it is going to react, okay, to what level it will come down and to what level it will then further move up, etc., and then the support and resistances. So we will cover everything on the daily chart. So now let's move on to the daily chart. Okay guys, so we are here on the daily chart. This is the daily chart. Okay, okay guys, so we are here on this the daily chart. Okay, this is the daily chart. Now this is the daily chart. So daily chart means one candle represents one day, not 1 week, not 1 hour, okay, 1 minute. One candle means one day. Now on this daily chart, first let me write down the support and resistances. Okay, quickly. Okay, 4860, 4860. Then we have 4885, 4885. This is the final resting place of S&P 500. final resting place. Next comes 4830, 4830. This is the immediate okay, resistance. Then comes our 4790, 4790. Then comes 4740, 4740. Then comes 4690, 4690. Okay, then further we have 4633 or 4635, 4635. Then we have 4592 or 4590, 4595, you can say 4590. Okay, then we have immediately 4572, 4572. Okay, now because market is moving around 4700, 4800, so this is it. Okay, now when it comes down, maybe next week or like mid of January or by end of January, then I will give you further support levels. But up to now, this much is okay. Okay, these are sufficient. So these are the support and resistances for S&P 500 index for the coming week. Now let's do the technical analysis first, okay, and then we will see like the probable movement of the market. Now if you see that this is the upper band of the Bollinger Band, this is the median of the Bollinger Band. Market is between upper band and the median. Market is bullish. If you see moving averages, clear fan out, market is bullish. If you see Ichimoku, market is moving above Ichimoku. In the bull side, market is bullish. Now let's talk about some other technical indicators. MACD is clearly bullish, because MACD is almost 39 and signal is 27. MACD is bullish. Okay. Now comes the stock RSI. Stock RSI is weak bullish. I will not say that it is bearish. Okay, because stock RSI, see the K channel is still above 90, Okay, so whenever the K and D channel are above 90 or are in the range of 90 to 100, which means market is bullish. Okay, then comes the divergence. So divergence is normal. Okay, surprisingly it is normal, okay, but so last week I was thinking that it will shoot up to like 70 or 75, but it did not. Well, because the divergence is normal, it will help the market to move up further. Okay, because market will come down only when divergence is heavy. Now comes the RSI, the momentum. So momentum is almost 50, okay, and it is supporting the bulls. So through all of the technical indicators on the daily chart, through all of the technical indicators, okay, this thing is very much clear that market is clearly a bull market. It's a bull market. Okay. Now let's see how what is going to happen in the coming week. So first, you can expect the market to further come down. Okay, means probably on Monday or Tuesday, to market to further come down, and this 4740, okay, as I'm telling you for last couple of weeks, that 4740, okay, it is acting as a critical resistance and critical support. So first the market is expected to come down, and this moving average it will move up. Market will try to meet this moving average around here, which is 4740 or 4744. Here it was 4744. So somewhere around 4740 to 4750, market will meet this moving average. Upon hitting this this moving average and this particular support 4740, now this is where market will hold. Okay, this is where market will hold. Now after holding here, market will take a U-turn and then market will move up. Then market will move up. Okay, so this is what is most likely to happen, most likely. Okay, now another scenario is whenever market comes down, it will hold here, and if for some reason if it further comes down, then this moving average, it will reach around here, somewhere around here. Okay, but this thing is supposed to happen intraday. Okay, means market will come down, then will retrace, just like this candle or this candle. First it moved up and then it came down. Okay, so it will happen intraday. So this moving average, so market will further come down, market will meet this moving average. Now where, if you see the confluence zone, okay, here, so you can see clearly around market will meet this moving average around 4715, 4715, or 4720, maybe 4710. Okay, 4725, somewhere around. So this is where the moving average will be, and whenever, so this thing will, remember, this thing will happen intraday only. It will come down and then it will retrace, because it has to hold here, it has to hold here at 4740. Okay, whatever happens, it has to hold here. Now after hitting this again, okay, it will retrace, because market is in the bull moment. Okay, means there is a bullish movement, there are bullish sentiments in the market, so market will move up. So it is coming down and then it will further move up. Okay, now if for some reason, means, see, the chances are very few, very narrow. If for some reason, if it comes down, means if this particular support, okay, it means if the market, if it breaks this particular support, in that case, and it breaks this particular support and it breaks this moving average, then further, then the chances are that it will come down and will hit this support, and then after hitting this support it will move up. Okay, we see whatever is going to happen, it will come down and then it will retrace, it has to retrace. Okay guys, so I have given the link to my Discord spreadsheet in the description of the video. You can take a look, and also I am running some stock market options trading strategies programs. So if you wish to join these programs, then you are welcome. Okay. Okay guys, so this was my technical analysis for the week of January 3rd, 2022.